Meet Kevin has flip-flopped and bought back into the market. So to catch you up to speed, last week, Meet Kevin sold about $20 million worth of his equity positions because he was afraid that the market was going to tank. But as of today, he made an update video revealing that he has bought back 45% or roughly $9 million back into the market. Today, we are going to go over all of his positions that he stated, and I'm going to give you my thoughts. If you're new here, my name is Bryant. I am a small business owner, investor, options trader, and I am on a journey to financial independence, and I've been lucky to find success. I've been lucky to make a lot of mistakes, and I want this channel to be a very, very transparent look at all the ups and downs and lessons I've learned along the way. So here is what Kevin did, and I'm going to just list them in case you don't want to hear my explanation. But if you do want to hear my thoughts, definitely stay till the end because I'm going to walk through all of them, and I think some of my thoughts will surprise you. So Kevin has bought Lemonade, Huobi Mining, BKT Holdings, Cardano, Solana, Luna, Tezos. Those are cryptocurrencies. He has also bought Tattooed Chef, Shift Technologies, SoFi, and Nano Dimensions. We don't know how much of these are in actual equities or in options positions. He didn't really break it down like that, but we do know he spent 45% of his cash, and 15% of all these are in options and $1.2 million in crypto. If you don't know what options are, these are just contracts that represent more shares. It's basically leverage. It's a bet or a chip that represents more shares. So if they move up, you'll make a disproportionate amount of gains, but if it goes down, you will also lose potentially more. He is also short ARKK, which is Cathie Wood's main ETF, and Lucid Motors. Okay, so let's just go down line by line. Let's look at Lemonade. So Lemonade is an insurance company, and they are a young, leaner insurance company. They had a previous high of $163.93, and they are definitely down a lot from their highs, even from their 9-month ago highs of 107. Kevin said that this was a good deal, that it's very, very undervalued, and just looking at the price action, I would be inclined to agree. So what he's done here, I think actually makes sense for him. Essentially, what he's done is sold off a lot of his positions, which he admits were very, very heavy in Tesla, and he's made a lot of money in Tesla, but now he's buying into companies that are on sale. So him on a personal level, this actually makes sense. But for you, the watchers, you can't really replicate this because unless your portfolio is exactly like Kevin's, it doesn't make sense to do this. And also the way Kevin did it, was that it did seem like he was selling out of fear. Had he said that he was just selling his winners to make room for losers, then I don't think the backlash would have been quite as intense. But it does seem like he is making these trades on a whim. Now, also in Kevin's defense, he said that this was his plan all along, that he did mention that he wanted to go invest in some more small cap companies, but just the whole vibe of what happened, it just felt like it was still an impulsive mood despite how he explains it. I think this actually makes sense for him if he's able to get all these small cap companies for cheap. So the next company that we will talk about is Huobi Mining. Let's look that up. Huobi Mining stock. Huobi Mining is a digital currency mining company, and comps would be Mara or Riot. And let's look at its stock. It hit a high of $16 and now it's a little bit down. I can't pretend to know that much about all these companies. All I can say is broadly in this space, I do think also this is a pretty good buy because personally I am quite bullish on cryptocurrency and mining in general, and this is low. I think if you want exposure into the mining space, this is as good of a play as any. This is definitely one of the smaller mining companies with a market cap of just a little over $1 billion. I know Riot, which is one of the bigger or more popular ones, is sitting at about 1.8, so just almost double the size of Huobi Mining. But with these smaller mining companies, your potential upside is greater, but your risk is also higher. So next we have BKT Holdings, BKT Holdings. This I haven't heard of. Let's look at what it is exactly. BKT Holdings, that is also a technology platform that enables consumers, businesses, and institutions to unlock the value of digital assets. So just taking a quick look, it just looks like another type of exchange or wallet, but let's look at the stock. And yeah, as of today, Meet Kevin's play has turned out to be quite profitable. At least if you were to sell now, on average, based on all the companies I've already looked at, he would be up 10-15%, which is great. But the assumption would be that he is willing to sell right now at 10 or 15%. If you were to look at the longer term time span, all of these companies have been depressed for so long that I would suspect that Kevin thinks he can make more, not just 10 or 15%, but maybe even 20 or 25%. So can he catch the top? Is he able to take some profits now or take some profits later? Or is he going to wait for more profits and then we're going to see a dip and then maybe it'll come back down to where it was just a few days ago and he won't have any profits? And that is the problem with trying to play this game. And I keep reiterating it's a game because this is not investing. This is trading, which for most people is gambling. If you look at the statistics of any type of trading, the range will go from 98.5 all the way to as high as 80%. But most people will lose money trading because no amount of technical analysis in the world can predict certain things that happen that will ultimately affect the market. And the market is also not logical in the short term. Everything could be set up for a company to be successful, but the share price will not necessarily reflect that because it is made up of human traders with human emotions and they buy and sell at the drop of a hat. And Meet Kevin is the perfect example of that. Next, we have Cardano, Solana, Luna, and Tezos. And I'm grouping these together because they're all cryptocurrencies and they're definitely in the higher risk pool for the average viewer. I would say for all these, also a great buy. If you have cash on hand to buy right now, we are in a really big dip / correction right now in all the spaces. And the thing is, when the S&P 500 corrects, growth stocks correct a little bit more, and then crypto corrects even more than that. Let's go to CoinMarketCap. Let's look at Solana, which is number 7. Anyone who can buy in now at $111, $100 when it had a previous high of $250, they're getting an absolute steal, in my opinion, because the chances of it hitting its previous highs, at least within a couple years, I think are very, very good if you're bullish on crypto. So yeah, great play. Would I have sold Tesla in order to get into this? That would be a different story because we have to think about the opportunity cost of what Meet Kevin did, of all the tax implications, because if he sold things at a lot of profit, he's getting taxed upwards of probably up to 50% on a lot of these gains, especially if they're not long-term gains. But in a vacuum, yes, this is also a great buy. And yeah, all of these are down a lot, so they're great buys. So now we have Tattooed Chef. Let's look at Tattooed Chef. Tattooed Chef is in the food space, and you can see that they sell different types of pre-made products, and they also have a very strong, cool, catchy brand. If you look at it, right now it's up 7%, which is great if you got into it at the bottom, but that's very, very hard to time. I actually don't know that much about this company, obviously, but also I kind of stayed away from these companies that are getting a lot of hype on Reddit and in the onlines because, to be honest, that just adds a lot of volatility. And when people on Reddit are excited about a stock, I often just want to look in the opposite direction or look at the alternative ideas, because momentum trading is a thing, but by the time you see a Reddit post happen, that means people are already reading it and things are already getting pushed, and that is too much out of my control, because as quickly as a stock becomes a meme stock and gains traction, that's how quickly it could fall. And that amount of volatility, it feels so gambly to me. We are not talking about fundamentals when the Reddit gang goes in on something. I don't think that is a profitable long-term play. And you can see that by what happened to most holders of GME or all these other meme stocks. A select few got super, super wealthy, but most people lost money. It builds bad habits. And again, it's all about opportunity cost, to put your attention on these very gambly, high-risk plays when you could put your attention on finding real companies with true value. Statistically, you are going to be way more profitable, become wealthier, actually finding good companies. The other way is just more gambly. It's just higher risk with not high enough reward for me to justify investing in these things. Next, we have Shift Technologies, and then this is just like a Hertz. It's a car rental company that's also pretty new. Also, it suffers a little bit of the same issue as Tattooed Chef because I heard about it a lot in the interwebs and people are really excited about it. But, we can see that it's also dropped a lot from its previous highs. And it's so low right now that, yeah, it's at a discount. It could potentially be a value stock. It seems like a solid buy at this price, but I don't know enough information about it to really make a judgment call of how long you can hold this. Me, Kevin, did say that these were short-term plays and that he's trading. So please keep that in mind. This is not about any type of deep insight. This is mainly based on price action. Next, we have SoFi. That's Chamath Palihapitiya's company, a personal finance company that's also new, built for the future because it has a lot of access to cryptocurrencies and it has a lot of educational programs built within it. And its app is supposedly leaner because it's younger and more easy to use than previous legacy financial entities. And here we have a nice recovery. It is also down from its previous highs by a lot, but this has seen a lot more consistent up and down. SoFi I actually did invest in because I liked Chamath Palihapitiya and I used its product, which I think is super important, and I enjoyed it for the most part. It's not a perfect product. Sometimes I think it's a little bit overcluttered. It offers too many services, but yeah, if you have the cash, it's a really good buy right now. Most things are on sale. Next, we have NNDM. This is Nano Dimension Technologies, one of the very popular ones in the 3D printing space. Kathy Woods really, really went to bat for this company, and it is down a lot. Also, less than $1 billion. I think this is also a decent buy just based on the price, just based on where it was previously. I think there's no reason that this shouldn't be $10 a share within a year or two. But there are other opportunities that I understand better, that I have higher conviction in for a short-term play, which is what Kevin is doing. He's doing well, but the stocks today easily could have continued to drop more. There's no reason that it went up or down. If anything, volatility is really high today, and I wouldn't have made bets like this right now. Finally, we have his short positions, which is ARRK, which is kind of funny because some of what he's invested in are long positions and they're stocks that exist in ARRK. He didn't really say that he was closing this or opening a new one. I just know that this exists. I think ARK is already pretty low, so I wouldn't be shorting ARK now. And even here, when we kind of pull it to the 5-year, we can see that there's a little bit recovery. I would definitely not short ARK. And I wouldn't short companies in general, just because statistically, over time, if you just look at a long enough time span, the market generally goes up. So to short anything, you have to have a much higher confidence or have some kind of edge than the reverse bet, which is just to say long-term that something's going to go up. Finally, we have Lucid Motors, which is his last short position. I love Tesla. I think they have done something no other car company has done, and all of these other upstarts are just riding the coattails of Tesla because Tesla made it look so easy that anyone can do it. But the reality is they can't. It's not that easy. Lucid can make one really cool car with great range, great speed, but can they make it at scale? What's their cost of making this car? So Lucid at a high of $55 and now it's at $34, but just 4 months ago it was at $24. I am not particularly bullish on this. I think it's price action in the short term. It could easily continue to go up because in the short term, the market is illogical. People like the car. It's a great looking car. It has a really cool story. It could easily go up. It could easily go down. But in the long term, I am so uncertain about this company. They have not proven their business model to me that they can make cars at scale, that they can be profitable. And it's just too early to make a bet either way. But yeah, that's it for Meet Kevin. What I am doing is just continuing to hodl. That's basically it. If I have any free cash, I'm continuing to buy the dip. Even in crypto, I've been buying the dip forever. And I also do crypto mining, so buying the dip has been easier in that I'm essentially just paying for electricity and that spits out some cryptocurrencies. So I am down a lot. Nearly half now is crypto, but it doesn't bother me because any money I've invested is money I don't need to live. It's separate from an emergency fund. It should just be money that remains untouched. Just try to forget about it if it's something that worries you. If you're a more active investor, do what you need to do, but try not to let your emotions get in the way. I want to reiterate, I like Kevin. I think what he did was smart for him, but just because somebody else gets lucky doesn't mean it should work for you, and you should really focus more on the process versus the outcome. because you could hit a golf ball with terrible form and get a hole-in-one, or you could work on your form and make subpar swings for a while, but then be able to hit golf balls more consistently. You want that consistency in success versus that one in a blue moon Hail Mary with terrible form. So just make sure you know the difference between getting lucky and having an actual strategy. That's all I have for today. Thank you for watching.